Well, good morning, everybody. Hopefully, you're having a wonderful day. This is Andrew Horowitz, and we're going to be talking about the markets today. We're going to be talking about a variety of our indicators over at TriggerCharts. I'm the co-founder with Kevin Hoffman of TriggerCharts. Hopefully, everybody can see my screen okay. A quick check of sound and make sure everybody can see what's going on. We have a lot of things to cover this morning, so hopefully, make sure the sound is going good. All right. We have a nice group today. Actually, a lot of people are very interested in what we have to talk about. You know, one of the things about TriggerCharts is that we've been very successful working on the TradeStation platform. In fact, we are the #1 highest review on the TriggerCharts network. So that's pretty cool. So what we're going to do today is go over a variety of things. I want to kind of go through some things as I scroll through my slides here and let you know that there's a whole bunch of things you need to know. Of course, trading is risky. There's a chance of loss. Futures and options carry excessive risk. Be aware that you need to do some good research. Don't just jump into something and do it with just because, wow, somebody said it, or because there is maybe a particular love of a stock or a future, or if you just have to do it, you got that FOMO. But just remember, there is risk. A lot of other things here that we're going to be also talking about. All right, so with that, everybody ready? Everybody can hear me? So, yeah. Everybody's good? All right. All right. Just checking on everybody. Good. All right. Let's take a look. So here's a question I have for you. And the question is, what's the main driver, and what's the thing that really creates price support and resistance? The idea that when you have an instrument, whether it doesn't matter, whether it's Forex, whether it's a cryptocurrency, whether it's a stock, ETF, whatever it is, what is the major driver of the levels of support and resistance? You can check out the chat, put that in the chat there, and we'll try to go through that real quickly. I want to make this interactive, so let's make sure that we have that going on, that two-way discussion, okay? So, yeah, there is some good point there. Everybody's kind of, maybe some of you have seen us discuss this before, but yeah, volume is a big issue. Obviously, time and how long a price is stayed at a particular level sometimes becomes very important. But the real thing that you want to look at is the whole idea of volume, because you know what volume is. What is really volume? Volume is the footprint of traders on the markets. So when you look at something and you see, for example, you have a stock that's trading at a particular level for some time, but maybe there is not a lot of volume there. And maybe it's just trading there because there's not a lot of interest. Well, what happens when you have that kind of situation is much different than when you have a stock that's trading at a particular price for a period of time and there's a tremendous amount of volume. Because what you're seeing there is a lot of interest at that level. Markets are enticed to buy at that level and sell. There's a lot of stuff going on right then and there. Therefore, that is a much more difficult area to breach, whether it's on the upside or the downside. So when we look at this, I want to kind of share this with you in a bit of a different view here. So you have two scenarios. You have a scenario where on the left-hand side, we're calling this #1. We have all these bricks. Think about a wall of bricks, and you're going vertically into the bricks, okay? And I'm asking the question here is simply, in scenario 1 on the left-hand side, and what happens is that on the left-hand side here, we are seeing that there is basically bricks all the way from top to bottom, right? On the right-hand side, there's an area of no bricks. So obviously, which area is the drill? If you were going to be drilling forward and you got all this pressure going on the drill and you're pushing it and you're trying to get through it, which side is going to be moving through faster? On the left-hand side, you got total bricks. On the right-hand side, you basically have a gap, an area of nothingness. So now, if you look at this and you find that you have an area of basically a hole. You have a gap. These are times when prices move very fast vertically through time. And if you can identify those, and you see here we put red and green and cyan colors because that's what we're going to show you in a second. If you can identify those and you can actually get to finding where those are on a chart, Because what we do here is we're finding kind of like a stud finder. We're looking for where those holes are and where the support levels are. We're looking for where there is opportunity to find a fast moving stock or a future or an option or whatever it is into an area that you could trade, and it moves vertically through time much faster than it does in terms of if you had a consolidation, for example. Okay. So that's basically the premise of all this. So basically, you have this volume at price concept. We look at this in the form of market profile. What we're doing is we're counting up and putting into a calculation all the volume and the buys and sells that happen at that point. And what happens there is when you add it all up, you can come up with something much different than a traditional volume line that you see across the bottom of a chart. Because when you look at the bottom of a chart, you see that volume line, it's just a culmination number. So, every bar, whether it's daily, 30-minute, 10-minute, weekly, each bar represents the totality of all the volume for that period. Well, that's great. It tells us what happened on a day, but we don't know exactly from there what price the volume was playing at. So now what we do is in our indicators, we developed a way to calculate all of the price action, add it up, and bring it to us bar by bar, but on a horizontal basis that overlays a chart and shows us where the volume during a specific time period actually played out. So you have this consolidation through time is one possible way that we see markets. And what you see that is that usually takes a longer period of time for stocks to meander through a particular pricing range. And then you have breakouts, two different categories, very important to look at, where you have one is the opportunity to find a stock that can move very quickly, which is what we want. That's what we're looking for. On the other hand, what we have is a consolidation, and basically you're going to be sitting, waiting, looking for opportunity, hoping, praying that something happens eventually. That's not what we're looking for. When we're trading, not investing, trading, what we're looking for is those vertical moves through time that are very quick. Basically, what we're talking about is something called auction market theory. So again, there is two different ways that stocks move, either horizontally or vertically through time. And we can create these market profiles to identify where they are, these fast zones. And here's what a traditional market profile looks like. So what you're seeing here is areas that there are significant amounts of volume, areas that are limited volume. But a lot of times these are more difficult to really look at. We have this on our charts. We call this the radar. But we've really taken this and compressed it down to just 3 lines. Each one of these can have 50 or 60 lines to show us a real defined portion of the market and what's happening. What we did was we went out and decided, hey, you know what? Let's create a much easier to use process that gives us just the key points, 3 points. We got the top line, or the resistance, if you will, the bottom line, which is support, and the midline, which is colored cyan, which is basically your high volume node, the area of most interest inside of there. And we can see when they're either wide or when they're tight or when they're looking like they're been there for a long time. We could track from periods of time where that resistance and where that support is, and then find out where the breakouts are. So far, you with me? Everybody with me? All right. Let's go to the chart. All right, give me a quick heads up if you could see the chart okay. All right, great. All right, so what are we looking at here? So basically, this is, in a sense, two things that we have. It's the Commander series through TriggerCharts, and it is the overlay of aileron on the bottom of the chart here. Before we do that, I want to look at something real quick. We had some polls here. There's a poll that's there. If you could see that poll, it should be shown up towards the bottom. If you scroll down into the tabs where it says polls, I only see a couple of people answer these questions, but basically a bunch of futures traders out there. We have some other ones as well. There we go. All right, let me just go to polls. Okay. All right. Yeah, thanks. Just keep on filling that up real quickly. I want to see what everybody's doing. So a lot of ETFs, some futures. Okay. Stocks. We got it. All right. Nobody's playing the cryptos, huh? What a day today is for, for Bitcoin getting slammed. That was like the old days. All right. Let's go over the charts for a second, and I want to focus in on a few things. On the top here, I'm not really going to focus in on that today. I really want to give you a more granular view of what's happening in terms of how we look at stocks one by one. Now, I'm also going to let you know that we can use daily, we can use weekly, we could use 30-minute, 15-minute, whatever we want on the chart. I want to really talk about the process today and what we're looking for. So I may use a lot of daily charts to give you examples and just show you patterns. But when those patterns appear on a 30-minute chart or a 15-minute chart, same discussion, right? It's the same exact situation. So we're gonna look for these patterns. And when we look for these patterns, again, I'm just gonna give you examples probably on dailies today. We can find where things are happening that may be really profitable opportunities. Now, if you look at the top here for a second, you'll see also we have 30, 60, 240, daily and weekly. What we did was something that has never been done before on TradeStation. We actually went and used their radar screen and were able to do a multi-time frame across one particular row. So we have these columns that give us each of those, and you don't have to put the same symbol in 20 times to look at the 10-minute, the 30-minute, whatever it is. We base this on a 30-minute chart. It's important to recognize that because we think that the 30-minute has enough volume and enough structure to actually give us a really highly confident signal. But you can do this on 60 minutes, on 180, any multiple on a minute of 30 minutes, so 240 minutes, etc. I'm not really going to focus on the top part of this today. I'm going to use it more as I have some storage there. But we do see, for example, that the ES minis, I want to show you something here. And I'm going to bring this chart up a bit and make this one right now a little bit bigger. And really what I want you to recognize, I drew this in yesterday. And I drew this particular chart because I saw that on a 30-minute time frame on the ES minis, for the S&P ES minis, there was this kind of gap range. Look at where we start. And we were right there when I drew this, right at this line right here. And I noticed, hey, you know what? There's something interesting happening here. When I look left, I like to use my box tool. Very simple. Just grab a box in TradeStation, just draw a box. When I use my box tool, what I like to do is kind of look left and find out where there were other areas of interest. And just from these three lines, right? The red line being resistance, the blue line or the cyan line being the high volume node, if you will, and the green line being support, I can see, hey, there's nothing to the left here. We must have had some kind of gap up. There's not a lot of interest in that area. And once we blew through that area to the top, and all of a sudden we got a new altimeter, these are called altimeters, that was drawn, hey, there's a shorting opportunity. And lo and behold, you see what happened. It traveled fast through time once again through this, right down through here. Now, I'll show you one more thing. I'm just going to put on a particular, you remember that market profile I told you before that had a lot of, right here, the lot of degrees of the much more additional data, basically, is what I'm talking about. You can see the same pattern on this chart over here. Let me take off this particular one, but you can see we saw this gap up, nothing to the left, and this gives us a much more granular look at everything. It's really showing us that there was this opportunity for this short. Where's the support at this point? Well, probably at the last line, that yellow line. But again, taking this off, not clouding this up, just giving it some information. So what's happening, you know, some people are having a problem of sound. I don't really understand what's going on. But I think there's there's new security protocols inside of Chrome and Explorer that you have to click. But we'll kind of get to the bottom of this. It's the first time using this particular product, this new webinar system. If it doesn't work, we're going to go somewhere else. And yes, we will probably have it working on the directly with YouTube, but we'll have a replay available too. So basically, we're using the default settings on these indicators, the ones that are set up and that are sent directly when you subscribe to this. So you can see this. I'll just do it really quick. That's it, 277. Then we have the autopilot that tracks along with it so you can see. Basically, this color coding that you get, which is really powerful, right? This color coding is really important because it easily allows you to just take a glance at the chart and where are we? Same thing when you see it up here. You can put a lot of charts and symbols up here. But basically, we're saying, hey, there's a breakout going on here. Get me in. And there was an orange, and that says, hey, get me out. We have red, which is short again. So it's very simple, right? Very simple. Yellow is, hey, there's an alert. Something's happening on the close of that particular bar. What do? Well, You follow along with it. You go green. If you like the setup, if you did your research and you think, hey, this works, you go right here, you go into a long position. And then right here at the orange, you're out. So that's the ES, but I want to kind of, let's, bring this here. All right, moving along. Here's some stocks of interest I thought were kind of interesting to look at. And we're going to do a few things here. I'm going to make this a little bit smaller. Look at this. Anybody, is this an uptrend, downtrend? What do we got here going on? Yeah, clearly a downtrend. What's interesting about this is when you look really long-term at Tesla, I look left. Once again, I look left. I take one of my tools, like my horizontal line tool, and I take a look, and I'm like, hey, there's no structure here. Below this level, there's nothing. Is this a tradable position on the upside for a long position? Not in my opinion, because I have no support. Yes, I may get some support eventually here, but right now, what is this telling us? Because it's really important. What this is telling us, it's a very simple rule. Write this down. Below the green or below the support line, do not be long. The same on the other side. Above the red, above resistance, do not be short. Right? Simple. Now, do you want to go short? That's another question entirely. Do you want to be long? I don't know. But if you follow the rules of above the red, above resistance, don't be short. Below support, below the green, do not be long. Very simple process to follow. And what I like about that is it's simple. There's a lot going on in all of our days. When you're trading, and even if you're totally focused on your trading, let's be honest. How many stocks are there? How many Forex instruments are you looking at? You don't want to be cluttered up with all sorts of really difficult data to look through and to have problems. But bottom line is that you don't want to have a situation where you're on overload, where you can't make a decision because you're doing so much research. And I want to make sure it's easy for me. That's what I built this for. Basically, I want to make it an easy time for me to find out what's breaking out, what's breaking down, what's in consolidation mode, where the best opportunities are. Okay? The gray image should be a stock chart. Oh, you guys are seeing the charts, right? I'm not sure what the problem is here with some of this. Yeah, okay. That's what I thought. Let's take this. This is today. This is something today. There's really nothing here. Pinterest down 16% here. I thought this was interesting. Beyond is another one that's kind of interest, but this is no structure on a 30-minute chart. Beyond, this is the Beyond Meat. I was told I have to try these fake burgers, but we'll try them one of these days. But it's a very new IPO. You're not going to get a lot on the daily basis. But when we look here, and let me move this over because the chart is blocking it a little bit there. When we look at these, there's a better way to look at it. I'm going to just kind of make it bigger. We don't need the left side. That's good. When we look here, the structure is basically below it's very simple. You take your cursor, you go here, say below 88.62. What does that mean? Well, it's probably a short opportunity. But look at this. Look at how refined. Remember I talked about earlier, where's the fingerprint of the market? Where are traders trading? Right here, look. Right here. They can't get it below seemingly $92 on a 30-minute chart. Now, of course, once it breaks down, right now it's trading pre-market at $90.55. You got till about 88. Let's call it right at $89. Once it gets past that, you got nothing down. Draw a line to the left to right about $83. So this is kind of the structure for short-term trading that you can look at. I want to show you some examples. Oh, this is interesting. So let's switch charts again here. Switching charts. So this is Bitcoin. I want to really show you a few different things here. Bitcoin now trading at 7,100, down 8%. It went down as low as 6,600 from, where was it? About 8,300. You look at this consolidation right here. This is really important. Remember we talked about horizontal through time, and we talked about the whole idea of vertical through time, and we want to trade those that are going to be vertically fast through time. You don't want to be sitting on a stock or a position here that is going to be, showing something like this. What we want is this consolidation. Where the next breakout is going to be is where we want to play. When we see tight consolidation and it getting tighter and tighter versus, take a look here, take a look right here. Everybody see how wide those are, those bars, the support resistance lines? And then you get over here, they're very tight. They get tighter over here. They get tighter. It's almost like a, it's being compressed to a point, and then it just explodes. What you want to do in that situation is you want to find out which direction it goes. And look how it exploded. Off of this base of 39.79, exploded, doubled up from April through where we are now. Now, of course, it's getting slammed today, but generally speaking, there are these holes that you can find or consolidation points, and there was like nothing to the left. Once you got over here, watch, let me show you real quick. Draw the support. Once you got above there, there was nothing to the left. Look at all this blank area. That's what you want to find. You want to find that blank area, and then you look at this level of sort of opportunity. Where is it that I can find this opportunity? And when there's nothing in it's blank to the left, that's what you want to play. Let's keep going along here. Got some other ones here. There's a little bit of different situation I want to show you here, but basically, Apple. A lot of people trade Apple. They want to know what's going on with Apple. I'll kind of condense this down a little bit. Apple, I'm going to show you now just a little bit of a different indicator I want to show you here, just to kind of bring this into the discussion. And what you have here is the Commander series, which is the altimeter, and you have obviously the radar and all these good things on the top that shows the support, resistance, etc. I like to blend that in with a trend indicator, a momentum, and see where we are in terms of how things are playing out, how the momentum is going. So what I did was I took a look at, for example, Apple. A lot of people trade Apple. A lot of people own Apple. So now what happens is that you have this incredible amount of downdraft. We saw that it broke down. And of course, that if it's moving down, it's stock is moving down, it's a downtrend. But here we can see where there's overbought and oversold signals. These dots that you see, the yellow and the red on top. So from the bottom, it's a cluster. It's an area that we're getting oversold several times, below certain numbers, below 80. It's looking like the trend is something to pay attention to, in particular where that trend changes. And what I want to look at here is really where that trend starts to change and I see support. So right here, right? I'll move a little bit. Right here. That's when I get interested. When all of a sudden I see this divergence of the trend is no longer in a negative state, starts to move up, I get support along the lines of the altimeter, the Commander series, the volume-based indicator that shows me the footprint of the traders on the market. That's what I want to look at. I want to find exactly where they're going to be placing their bets, where there's no longer any sellers, maybe an exhaustion cycle that's playing out. And at the end of 2018 gave us a lot of really great opportunities to look at some of these kinds of patterns. So I think, for example, Clorox also had some of these patterns. You see like some overbought, some oversolds, and then you get these at levels that are playing out. But let's keep on going down here. I found some really good ones on here. All right, here. So one of the ones is AIG now. Now, AIG I thought was really interesting because what do we see here? So things I all told you about, and I would just explain to you, and we just talked about the whole idea of horizontal through time, compression. When compression's relieved, it snaps. If we can find where that compression is when it's automatically drawn for us, and I put a box on top of this, but look at this incredible compression on AIG. And this is obviously going in through the end of last year. I'm using daily just as examples so I can find some ones that give us some good pattern recognition. But again, you can do this on your 30-minute charts, 15-minute charts. I don't really like to go under 30 minutes. I'm going to state that again. I think 30 minutes is a level that I really like to look at. But basically, when we look at this pattern of this high compression, this level where we're seeing a significant amount of agreement, that traders are saying, yeah, stock's valued about these levels, and I'm not going to let it go under. Then again, if it goes above, I'm going to sell it. They keep it in this very, very tight range, right? And then all of a sudden, the next move. Where's the next move? Well, so let's kind of go out and really zoom out on this for a second and take a look at something here. So what am I looking at here? Well, what I see is, I'll make this smaller because I don't really want to focus in on this. What I'm seeing here is that we have an area that is absent, is void, any trading. So I get this compression. Now I say, because if I only had the chart at that point, of course, I don't know what's going to happen next, right? I have to really kind of think about that. But if we did the research and we realized this is incredible compression, and then we look left, we simply look left. And then I draw another box and I say, okay, what's underneath? If this thing breaks, what's underneath? There's nothing. There's absolutely nothing. This is the opportunities that you get, that incredibly fast moving type of vertical through time scenario that I've been talking about. And AIG really illustrates this, I think, pretty well. Because what you saw was, look at this. I'm going to zoom in. Look at this incredible move down. There was nothing to the left. There was a hole. There was a fast zone. So basically, what I want to share with you here is that if you could pick up and find these kind of situations on a chart where you see compression, you start breaking below, and look how well this called it in terms of the color, right? Called it short right up here. So you got short right about 54. Right here, you got out at 49. A day later, went back short at 49. Got you out of the orange, which is about 41. About $7. Actually, total about $8 of total profit on that. About 20% or so. Now, Boeing also had some holes. Now, there's a reverse situation, not as clean as the AIG. And basically what happens here is when you look at this chart and you really kind of take a look at what's going on here, what you see is it's a very troubling situation. You got some double bottoms, you got support, basically, you got a trend that's questionable, you got a lot of things that are going on that are interesting, but yet at the same time, you know, there's no discernible pattern here. So when you look at this and you see that there is this opportunity, this hole, there's nothing to the left, there's nothing going on here. Basically, what you have to say to yourself is, okay, how do I play it? Well, if you start breaking up, and you don't really have to know that because we're going to identify it for you. Look how the green came in right here. So basically, what you have is a situation where you're going to be looking at this particular chart, and you're going to see that there is the opportunity to have a vertical move through time that's very significant. And when you have that vertical move through time, that's when you want to play it. Let's kind of keep going here. Again, Caterpillar, I drew where the hole was. I knew if we broke below, there was some real downside. And look what happened here. Very simple. We broke below, and then all of a sudden, there was this gigantic move. Now, was it because of the news that happened? Was it because of the end of the year in that period? Whatever the reason is, we know that there was the opportunity for that to happen. And when there's the opportunity for that to happen, essentially what you're seeing is that there is this incredible ability for a stock to really start to move significantly through this area and at a quick level. Because what happens is that there's nobody there that's agreeing. There's nobody there that's actually looking at where is this stock and the price that I want to buy it. We know they weren't there before. So if they weren't there before, why are they going to be there now? So essentially what you're seeing is that there is this footprint that's being left. And once you get beyond that, again, look left. I'm going to state that. I want everybody to chat right now. Look left. Always look left on the chart, right to left. Chat back to me. Type the words, look left. Thank you. Keep on coming. We got to look left. Always look left. We're going to look from this side to this side, from this side to this side, and we're going to see what's behind us. Thank you. Thank you. All right. Look at this one. This is CVS. So there was a couple of holes here. There's a couple of areas. I mean, there was this area up top here also. But again, look at the identification of this. How great was this? You could have popped this at 75 and you got a short signal, and then you got this level of support that popped in. You covered it. It's about 63. There you go. The market's opening up. So now where are we? So we got this hole, and then when you got this next leg down right over here, look how fast it moved. You know, you went from about 63 down to about 52 in no time. Now you're getting consolidation again. It's not as clean as I'd like to see it right now. I would not be trading this right now, but again, looking for these areas, these holes. Look at this one. What are we doing? We're looking left, right? So when you look at this, you have the area of absenteeism from traders. And once you broke above, look at this. I mean, obviously, we caught this nicely right here at 111 back on 2/20/19, because you see the orange, right? Zoom in on this. See, I mean, the yellow, sorry, not orange, yellow. See the yellow that broke out a couple days before the breakout and it just popped up and you went from about 110 to about 130. Then it got you right out, consolidated a bit, got some small position entries, exits, entries, exits. Now there's nothing. Now when I look left, obviously I see there's nothing above. If I do break out, that's really going to be possibly very good. But again, we're inside a consolidation. The consolidation is not long enough right now. What I like is when you see the consolidation that has a really long time that it can't get above or below a particular area. We're talking about a year. So you're really compressing and you're getting that, and then boom, it opens up and you get this great opportunity. Quickly through a couple of different ideas. Amazon. So what I thought was interesting about this was you got some interesting support here on Amazon. And this gives you, if you have a question, well, do I buy, do I sell, do I get in, do I get out? Where's my level? Where's my number? Amazon has clear support. And let's just draw a line and just show you. This is on a daily chart right there. I'm looking all the way through here, connecting as many lines as I can in order to figure out where these are going to be supportive. I see a bunch of lines to my left. There's plenty of room to the left that this support. There's a lot of consolidation there, but we drew the lines already for you. And you can look at this and you say, if I want to go long here for whatever reason, you're going to do so, whether the signal comes up and you're in a long signal or whatever. Bottom line is, you know what, below 1817, which is where that position is, that's where probably my stop out is on this stock. So you can look at these. There's a couple of these that are interesting. Booking daily holdings or booking holdings. Look at this nice line. Now, one of the things I want to show you on this chart, very interesting. Remember, there's always three lines, right? There's a red, which is resistance. There's a green, that's support. And there's a blue or cyan, that is the high volume node. Now, look, all of a sudden, right here, only two lines. What's that about? Well, what's happening is, if you actually hover over this, you can see that the support and the high volume node are on the same line, exactly the same line. What that tells me is a significant amount of support at that level. And when you have support at that level, and when you look at this from the aspect of, okay, where am I feeling good about this? How can I get in? Where is my stop out if I want to trade this on the short or the long? Bottom line, aside from the fact that we showed you to go long right here, look at all this great opportunity to trade a little bit on the inside. You could have been felt really good that, you bought down here at 1750, maybe sold at 1774, high price stock. Yes, I'll give you that. Bottom line is really good support at that level. Anytime you see only two lines, something's going on. There's a really significant support level that you can really feel good about. So it's right at those levels, and usually a little bit below. You can sneak in a little bit below. Another pattern I want to show you is the banger pattern. We call it the banger pattern because basically what it does is it's coming in, it's coming down, stock is coming down, bangs on support, and importantly, we get a change in the direction of the aileron, which is the momentum indicator, the banger pattern. What I like to see in this pattern, and I'll give you a couple examples, is essentially a stock that's able to hold support for some time along a green line and then reverses up once we get that signal. So for example, I use two different areas here to identify this for you. Basically what you have here is that you have that this pretty much, holding up on support, we got this bang right here, right there. See that right there? We got an oversold situation and all of a sudden reversal and you go into the green. This is now a nice pattern that's outside the boundaries of just our signals on here because I'm using two components to give me a further confidence in the trade. I'm looking at two different situations to give me a really high confidence where I want to look at where there's going to be momentum move and where there's going to be support. And if I got those two things that are aligned, I like it. Give you a couple of interesting other examples. I have this one listed. Here we go. Home Depot, a really good one here, right? So Home Depot, this is back in December last year. But look at this. We saw that there was at the bottom of this chart. Let me move this a little bit so everybody can see this really well. So the bottom of the chart, what we have is that we got this oversold signal here, and we got a cluster that formed. And all of a sudden, we saw a divergence. More importantly, we started to see that there was a holding of this level on the down, and you get this bounce right here, probably right at this level when we went positive on the aileron when the momentum. The aileron, by the way, is a combination of about a dozen, or I think I don't remember the exact numbers, a dozen or so traditional indicators and custom indicators that we put together to bring up a look like a MACD or an RSI or stochastic, but basically a lot of things go into this, and it kind of gives us a confidence reading on all that. And when you look at this and you see that the aileron goes positive, and we have this banger where it stopped dead on its support, and we got a new aileron drawn out, and it starts to move up, that's a really great buying opportunity. And essentially, you could have held this stock off of that low all the way. I would have held it probably all the way through right about here, where we got the reverse of a banger. We get the bang on the top, and now all of a sudden the aileron goes negative. See that? I'll move my boxes over for you. Right about here. You got a short signal also, but you got all of a sudden two things happening. You got this roll off, this divergence of the momentum that started. I would have been a little worried if we got this momentum that kind of started rolling over, and more importantly, we couldn't get above that level. Y'all with me so far? We'll take your stocks in a second and your questions. I want to show you a couple others, maybe see if I have anything interesting here. Here's clusters. I'll show you some clusters. Look at all these clusters forming here. Again, this is kind of a banger pattern as well, but the clusters you start to see, I'll move that around. Oops. All right, that's good. You move your clusters around. You got move my chart around. You got clusters that form here, and you got this banger pattern once again. How beautiful is this pattern? You guys like this pattern? I think this pattern is awesome, because what you have is, you really have just a tremendous amount of velocity to the downside. Again, it could work on both sides, but I like it on the downside. You get this velocity, and then you get a new altimeter that's drawn, and you get these clusters. Clusters are, we call these oversold levels. When we start to see too many of them, we mark them. See that? We mark them. Yeah, cluster bangers. And basically, you got here, you could have pretty much held this all the way from, what price is this right here? About 43. And then you start to roll over to about 51. Nice little trade there. Okay, let's see if there's any questions real quickly. Kevin, you've been answering all the questions, I think. You can answer any questions you want. Let's see here. All right. So you see that all the patterns there. I'm going to take a few moments and let's do your Q&A. Now, I'll mention to you that there is the opportunity, if you haven't done so, if you have TradeStation, you can get a 10-day free trial of all of the indicators. And basically, Kevin's going to put those into the chat area in there. And for all paid subscribers, new subscribers to the Commander Series, we're also providing and giving you a 30-day, no, scratch that. That's not at all true. What we're giving you is, today's offer is, we're giving you, any new subscribers to the Commander Series, we're giving you an online coaching session. Essentially, it is I think it's about a four and a half hour taped training and workshop that we designed to go through a lot of much more detail that we're talking about here, about all market profiles, support, resistance, how to play it, what to look at, how to use it. So anybody that signs up for the Commander Series, which is $149 a month, basically is, it's a paid subscription, not a trial. Okay. You'll be able to get that opportunity. Just email us at info@triggercharts.com or any of the email addresses. You can get that. Give me some of your stock charts here, or your stocks, your symbols that you want me to look at. And let's take a quick look at this while we're here. Let me bring up the markets again, these right here. All right, so we want to look at BA. I think we looked at BA before here. Let me. All right. Boeing. Let's make this a little bit smaller so we can see it just perfectly. Okay. So Boeing, where are we? On a daily basis, Boeing, where is it? Well, the problem you have with Boeing is it's really out of the hands of the technicals right now. It's essentially in the hands of whatever news is going to break and whatever's going to go on in terms of what's happening with, the Max and their planes and orders and all that. So, right now there's a bit of an area that you can see that probably resistance is right at about 365. That's probably the top line number until they can get resolution for this. Downside action to about 340. Again, just simply what I'm doing is I'm just looking left. Just grabbing where do all these lines converge? Where are all these levels that go into play here? So Boeing right now downside about 340, upside I would say probably somewhere around the level of 366. That's a good idea. That's Bruce guy. Marcus Gilliford. What else do we got here? Xilinx. Yeah, a lot of these chip stocks got hit yesterday. I'm just looking at dailies here right now. This is kind of getting into a really odd situation because you have holes, and below here, notice something. We're going to do our look left here. I'm going to draw this line right there. Look at where we came to the bottom today. We touched the bottom of this. It popped up. Why? Out of nowhere, out of any price that could be, did this stock, look at this. Where to go? Right there. Come right to the bottom there. Where is that? Well, look, right there. It's a little island. If it breaks below there, though, you're going down to about 93. Right now, this looks like a trend that's pretty awful. So that's a problem. UVIXI, Woody, UVIXI, first of all, let's just state the fact it's a broken instrument. I'd rather you trade the VIX. UVIXI looks like it's going to continue down a little bit here. I really, I don't, sorry, Woody, give me another stock. I don't want to use UVIXI. I don't think it's technically relevant. In terms of, it's a broken instrument. It's really problematic. It doesn't work well. You hold it more than a few days is a problem. The VIX is a different story, but again, that is a fully manipulated situation. So it's hard to look at. ACB, how are we doing? We got 3 minutes left. There will be replays available for this, by the way. We're going to get to the bottom of some of these audio problems that some people have had. ACB. ACB, you got to get it. It's very simple. You just got to get above $9. And then you got a little nub over here, but then you got this opportunity, a very wide opportunity up to about 10.5. So, it's up today. Stock starting to pile in. We were down 200 a minute ago. Now we're down what? Only 100. So, the buyers have stepped in. Let's see what else we got here. What does that say? $sign WRK. What is that? No, WRK. No. WestRock. Is that the one we want to look at? Who gave that to me? Sir Adam of the Koch Empire. I got some no agenda people here. I mean, again, you got a lot of consolidation zone. You just kind of draw it right here. All right. Got this consolidation zone. You got to break above that. It's pretty simple on this one. I'd like to see it above really $40 is where I like to see it. Patterns on a momentum. They're all over the place on this one. I don't really think that's something. Microsoft is interesting. Microsoft right now, we got a kind of a double signal. We got some good momentum going on. The only problem about Microsoft is it has to hold, which it has, 125 level, 124, call it 124 and a half. But beyond that, I mean, it looks good. You got this major resistance right here when you kind of draw left. It's only for the last month, but, it has to get above that to start really screaming higher, in my opinion, for this. MYSZ. What is that? Yeah, well, there you go. Up 60. My size. I think it's an Indian company, if I'm not mistaken. Up only 62% today from 65. Let's say there's anything to look at here. This is your line in the sand, basically. Right. There you go. You may see it back up into that level. Actually, a little bit higher than that. Right there. You may see it back. What is that? 95 cents, which is only 5 cents from where it is now. Back up into that real quickly. And I think probably you'll see a little bit of a bounce. More importantly, you got to hold today for this to kind of stay up there, right about there, which is about 91 cents. Again, it's pretty, Cray obviously was being bought today, so there's nothing to talk about anymore about this. Cray is being looked at by IBM as a potential buy candidate, the supercomputer company from God knows how many years ago. But if they're going to be bought out these levels, there's nothing else to look at. LLNW. Limelight Networks, good consolidation here. Really nice. Like to see this. Look at that nice consolidation zone. We'll call it right there. Back it up a little bit. Let's take a look. It has to make progress above right here. 325. Yeah. If you get it, actually, I would go over the highs though. 327, you got a good opportunity on the upside here. One more, and then we're going to have to end it. Support here is probably about the 996. Below that, you have some real pain in this trade. Downtrend is definitely intact. You came off a very long downtrend. You saw a little pop here, but that's not good because you got it overdone. So that's a problem. So I want to thank everybody for joining me. There will be a replay. You'll get an email automatically. You can go up to the top. Right at the top of this browser, it says, I think somewhere it says subscribe, right? You see that on the top there? So go up there and subscribe. All the, unless we decide to change, because some people had some problem with audio, but we'll check that out and work on that. But I want to thank you for joining me, and hopefully you enjoyed what's going on with this new platform we're doing. Every Friday we'll be here at 9 in the morning talking about stocks, the pre-market rundown at 9 o'clock in the morning. So make sure that you subscribe, you get in there. There'll be tweets coming out. Follow me at Andrew Horowitz, etc. Thanks a lot for joining me, guys. See you soon.